Hey, welcome back. It's Jason Wolter here. One very important way to gauge the temperature of the U.S. housing market is to have a look at new home construction numbers, builder confidence, and any changes to the number of mortgage applications to buy brand new houses. I mention this because the U.S. Census Bureau just released July's housing construction numbers with disappointing news. So both the number of permits pulled and housing starts dropped. In addition, it was announced yesterday that homebuilder confidence reached a 13-month low, and mortgage applications for new home purchases fell big time as well. So in today's video, I'm going to break this down for you, and also I promise you that most of this housing market data you won't see anywhere on YouTube, and that's because I'm a housing market data nerd. If you appreciate frequent housing market updates, then please hit the like button. I greatly appreciate that, and also share any of my videos on social media that help support the channel and help me reach my goal of reaching 50,000 subscribers by year end. Thank you so much for your support, and with that said, let's begin today's video. Yesterday, the U.S. Census Bureau reported July's housing construction numbers that fell short of expectations, so let me explain. Building permits to construct new single-family houses decreased by 1.7% from June to July of this year. This is now the fourth consecutive decrease in the seasonally adjusted annual rate of permits pulled by home builders. The decrease in July was mainly driven by a 6.3% drop in the Northeast region. Home builders in the U.S. also continue to pull back on starting housing construction. So for example, the number of single-family houses that have been authorized to start construction, but the builder has opted to not start construction, has increased in numbers. The seasonally adjusted number of units authorized, but not yet started, has increased in 6 out of the last 7 months. It also has increased a whopping 55.9% from 1 year ago. What this basically means is that the home builder has pulled permits, but they have decided to put their plans on hold to start construction. And I'll discuss why this is later in the video. The number of housing starts also fell short of expectations. So total housing starts in the US decreased by 7% versus an expected 3% drop. For single-family houses in the US, it fell by 4.5% from the previous month. What I found to be very odd was the fact that most of this dip of housing starts in the US came from a huge decrease in the Northeast region. So have a look at this, because if anyone knows why this is, then please leave me a comment below, because I'm left scratching my head and honestly don't know the answer to this. But when you look at this data here, in the Northeast, total housing starts dropped by 49% and by almost 40% for single-family houses. This is a much bigger drop than the other 3 regions in the US. Additionally, new houses that were built and ready to be moved in, those only increased by 3.6% from the previous month. This is obviously falling well short of what's needed in order to replenish our low housing supply. So check this out. According to the U.S. Census Bureau, the seasonally adjusted annual rate of single-family houses completed has declined in 3 out of the last 4 months. All right, so what the heck is going on? Because we obviously need more housing inventory in order to have a more balanced real estate market. I was searching on the web for some answers to this and actually found a very good reaction from the National Association of Realtors chief economist Lawrence Yun. So he stated the following: rents will be soaring in the coming months, especially for apartment units, as home building retreated in July. There was a housing shortage before the pandemic, and the shortage was exacerbated during the pandemic. Therefore, home building needed to be greatly ramped up as the jobs recovery took hold. Yet in July, housing starts fell by 7%, single-family construction is down by 4%, and multifamily construction is down 13%. Other factors holding back construction: supply chain disruptions in getting the right material on a timely basis, lags in getting approvals for development, and labor shortages. I've also witnessed these lag times in housing construction because my wife and I are going to be remodeling our house in the near future here, and we were told by our general contractor that it could take up to 20 weeks to get cabinets. Lawrence Yun of the National Association of Realtors went on to say the following: with home prices having risen to record amounts over the past year, home buying will become an increasing challenge, and a good number of households may simply decide to rent. Consequently, rental demand is rising strongly. With an inadequate supply of available houses, rents will be strengthening and adding further pressure to overall consumer price inflation. I think he's spot on regarding this because we obviously have a housing shortage for houses to rent out and also houses to buy. And the lack of housing construction to build brand new houses and apartment buildings is going to make this even a bigger issue than it is right now. Some home buyers are also putting their plans on hold to buy brand new houses. So I noticed that the MBA announced yesterday that mortgage applications to buy brand new houses plunged 27% from a year ago and 4% from June 2021. Despite the dip, though, this was the second strongest July reading since the inception of the MBA survey in 2012. However, what was concerning to me was the average loan size again increased to a new record of $402,000. Joel Kahn of the MBA said that home builders are still facing elevated building costs and accelerating home price growth from the continued imbalance between supply and demand. And this is one of the main reasons why builder confidence has reached a 13-month low. As the National Association of Home Builders reported, higher construction costs and supply shortages have led to significant price growth, which in turn has caused prospective buyers to experience sticker shock. The Builder Association's chief economist stated the following: higher costs and material access issues have resulted in lower levels of home building and even put a hold on some new home sales, as we saw in the number of units authorized but not yet started, right? While these supply side limitations are holding back the market, our expectation is that production bottlenecks could ease over the coming months and the market should return to more normal conditions. Meanwhile, it's been reported that high prices for houses is the number one reason why buyers have remained sidelined. About 2/3 of buyers in the second quarter of this year has spent upwards of 3 months searching for a home without success. What I found to be very interesting in this article was that in the prior 2 quarters, home buyers reported that their most common reason for not finding a house was getting outbid by other offers. So in other words, the number one reason why home buyers have not bought a house went from getting outbid by others to now, I cannot afford to buy a house. And I've said this a million times on the channel, but it's my personal opinion that the lack of affordability and affordability becoming more and more of an issue is going to be one of the main reasons why the housing market may cool off. In the meantime, building material prices are rising at a record pace, and that's not helping at all. According to a recent report from the Bureau of Labor Statistics, building material prices have only declined twice since December of 2019 and have increased 19% over the past 12 months. Additionally, building material prices have increased 13% year to date. That is a stark contrast with the same time period in 2020, during which prices increased by only 1.1%. To show you how insane construction costs are right now, have a look at this. The average change in building material costs from 2015 to 2020 was less than 2%. But in 2021, it's a whopping 13% year-to-date increase. However, the good news is that softwood lumber prices have decreased greatly recently. So the index for softwood lumber decreased 29% in July, and that was the largest monthly decline since tracking began in 1947. At the time of this video, lumber futures prices are less than $500, which is far lower than the all-time record high of almost $1,700 that was set in early May. Check out the link below if you're looking to buy or sell a house from virtually anywhere in the US. Also, if you got any value out of this video whatsoever, then please hit the like button. Also consider subscribing if you haven't done so already. You also can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day. I look forward to seeing you on the next video.